Croatia, a favorite destination for many Europeans, has seen a sharp rise in prices this year. The Croatian Minister of Finance even let it be known that the rise in prices could affect this year's tourist season. Why is it so expensive on the Adriatic coast this year? Is the adoption of the euro, the war in Ukraine, or the hoteliers to blame? We asked the chief economist of the Croatian Central Bank, former vice governor, economist Vedran Šošić.
Okay, so over the past year, we have seen price increases in the services sector, and in particular in hotels and restaurants, as one of the main drivers of inflation in Croatia. Other prices moved more or less in line with what we see in the euro area. But inflation was slightly higher in Croatia. It was about 8% according to the last data, and this differential is mostly driven by the price increases in hotels and restaurants. There is also a bit of a food component to it, but this is mostly because we consume more food. So the weight in the basket of food is larger in Croatia than the average for the euro area, and when food prices increase a lot, which is happening now, this also adds a bit to the overall inflation. So what are the reasons for so strong? So just to give you a bit of a flavor, according to the last data, I told you that the headline inflation was about 8%, and prices at an annual rate increased in hotels and restaurants at the rate of about 17%, so more than double the average inflation. So what are the reasons? First, we have a bit of a convergence. So the price level in hotels and restaurants in Croatia is still quite below the average for the euro area. So as our income level increases, we will see gradual catch up to the average levels in the euro area. So this is normal process, but this has been accelerated a little bit over the past year. In part, this is because last year we had a great season. So I think Croatia, of all the European countries, had the largest rebound in tourist arrivals and in tourist expenditures last year. So tourist expenditures last year exceeded 13 billion euros, and it's about a quarter more, almost 25% more than 2019. So that was the previous record year. So the moment in the start of the summer, when people working in this sector saw that there is such a huge demand, Croatia very conveniently located, most tourists arrive by car, no need to take airplanes, and there are problems with the air traffic last year. So for all these different reasons, also some countries were still locked up last year, so we abandoned these restrictions. So for all the mixture of the reasons, we had a very strong rebound, very strong demand, and this has driven this persistent increase in prices in hotels and restaurants since the middle of the last year. Also, one also important factor, to some extent, these prices were driven up by food, because food is input for hotels and restaurants. So the costs are increasing, energy also to some extent, but also labor costs more recently. So wages are increasing in Croatia quite a lot now, about 13% annually. So this is even increase in real terms, substantial increase in real terms. So this is also increasing. There is a large shortage of labor force in the tourist sector, in hotels and restaurants. They report the largest labor shortages of all the sectors. So there is a lot of pressure on wages, and this is also pushing up their prices. So it's a combination of reasons: increasing costs, but also very strong demand, which allow them to pass on these costs to consumers, and maybe even to expand the margins to make up a little bit for the losses they have suffered during the pandemic in 2020 and 2021.
Croatia entered the Eurozone on January 1, 2023. Prices of goods and services will be quoted in euros and kuna until December 31, 2023. What effect does the adoption of the euro have on prices?
Okay, this trend started already in the mid last year when we saw that tourists arriving in large number. Even before the decision on euro introduction was made, so we saw this trend taking place. And we did an estimate jointly with the colleagues from the European Central Bank of the effect of euro introduction on price level and inflation in Croatia, and we estimated that price of services increased a little bit, about 1%. On average, the effect for the overall inflation is about 0.4 percentage points. So this is just for January. The inflation was 0.4 percentage points higher than what it would have been without euro introduction. This is not so large. This is only a small portion of overall inflation, and this is due to the rounding up of prices of some services like coffee, for example. Prices of coffee have increased, or hairdressers have increased their prices. So some specific services have rounded up their prices. And also what we saw is that price intensity of pressure a little bit declined in February and March after this hike in January. So it could be that the overall effect of euro is even maybe a little bit smaller. So yes, there could be some impact due to rounding up, but this is only a minor portion of what is going on with respect to euro.
What about the war in Ukraine? What is its effect on prices in Croatia?
Ukraine, yes, of course. What is interesting is that we had very few guests from Ukraine and Russia, so we were not very dependent on tourists from this country. So this did not affect a lot demand. So demand remains strong, and that's what allowed companies operating in these sectors to pass on costs to consumers and maybe widen even a little bit their margins.
Does Croatia's membership in the Eurozone tie the hands of the Croatian Central Bank? Is there anything Croatia could do if it had its own monetary policy? We remind you that today the European Central Bank, based in Germany, performs this task.
We had a very stable exchange rate system even before we introduced euro. We had for almost 30 years very stable exchange rate, and we basically took over the ECB's policy even before we officially introduced euro. What happened during the introduction? We adjusted our monetary policy instruments. As you said, we cannot have different monetary policy instruments. So we reduced reserve requirements and foreign currency liquidity requirements, which injected a bit of liquidity, quite a lot of liquidity actually, into the banking system. And this has dampened the transmission of monetary policy in Croatia. So now people in Croatia, when they buy their houses, they can get lower interest rates than, for example, people in Germany or people in Austria. So interest rates have remained, they have increased a bit, but not as much as in most other euro area member states. So has this affected inflation? Maybe, but not probably so much. For example, if you look Czech Republic, interest rates in Czech Republic are much higher, but inflation is also in Czech Republic higher than in Croatia. So even if we had our own monetary policy before, which we didn't because we had a pursued stable exchange rate policy, I have doubts that we would be able to affect inflation with our own monetary policy tools. So maybe what we had at our disposal is exchange rate instruments. So Czech koruna appreciated quite a lot against the euro, so it is helping you a little bit when you go to your vacation. If we appreciated our exchange rate, it would hurt competitiveness. I mean, we had this type of shock increase in energy prices. It reduced substantially our current account surplus. So it was a negative competitiveness shock. So at that period of time, you would expect exchange rate to depreciate, to accommodate this cost pressures and not to appreciate it. Would just cause more problems for the producers. So I suspect that we would not be able to use our monetary policy instruments very much over the past year, even if we had them.
Croatia's finance minister warns of the consequences of rising prices for tourism. In your opinion, should the government, central bank, or other institution intervene, or is it more reasonable to leave it to the market and market forces, which will deal with rising prices on their own?
Well, I think that what you think is quite reasonable. So I think when these people who rent apartments see that there is very little demand if they increase prices too much, I think that they would cut their prices very quickly, and the market would find a new equilibrium. I think that's what your question was aiming, and I think quite clear that it is what would happen in case that these people hike their prices too much.